September is Life Insurance Awareness Month. It really is a good reminder that we all need to do what we can now to try and put ourselves and our families in the best financial situation possible. And so glad to have Michael Terrio here with us as always. Let's start. This is kind of something that's not always top of mind for a lot of people. So what age should people really start thinking about this? You know,
the thing with the age, it's going to be, I would say, more milestones within your life. I think when you look at marriage, that's a great time to look at it. Anytime you maybe have children, it's going to be a good time to look at that. Anytime you have a job change, because oftentimes you get life insurance with your companies that you're working with, that could be a change. Retirement planning to make sure you're protecting your spouse in case, God forbid, something happens, and then that leads to premature death.
Major life changes that could affect your policy.
Absolutely, absolutely. And whether or not it's still going to be the right type of policy for you. You know, life insurance is almost like a timeline. It can change as time goes on for what it can be utilized for.
Sure.
All the way from income replacement, college funding, and all the way to, you know, basically making sure you're protecting someone from a loss of a pension.
What items should you be reviewing and be reviewed in your plan?
So one of the biggest things that when you look at a retirement plan is going to be the cash flow. How are you living your day-to-day life? That determines whether or not you have that certainty or if you're hoping you have enough money. So when you look at your cash flow situation, it's going to be very important. I would look at tax ramifications. You know, when people get to the point of retirement, understanding how much Uncle Sam's going to get and how much you're going to get can play a very important role upon your overall financial plan.
So this does require some, I guess, ability to be proactive on your part to really anticipate those changes.
Yes, and changes are constant. And so what I always tell people is be a proactive investor rather than a reactive consumer. And the best way you can do that is by sitting down on a regular basis, making sure it's going to be what you want it to be. Because I want plans to be structured, but I also want them to be flexible enough that when life throws us curveballs, we can hit them out of the park.
I know there's probably no one-size-fits all, you know, type of scenario here, but in terms of you've got maybe your work life insurance, should you have more life insurance on top of that, any type of supplemental?
Sure, and a lot of that depends upon what your family lifestyle is and what you want to do. For me, myself personally, if I were to premature pass, I would want to make sure that my wife and my kids are able to stay in their home, stay in their school district, stay with their friends. I think it would be hard enough to lose me, much less lose their whole lifestyle. So for me, that's going to be a very important concept to take into mind. But if someone's at the point of being 75 and 80, maybe there's a different mentality as far as what they're trying to accomplish.
Plan ahead, be better prepared, hopefully.
Absolutely.
Down the road. All right, Michael Terrio, we appreciate